Oh my God, oh my God, oh my God, oh my God. Hi guys, Stephen I fought from I fought Fortune, creating fortunes for the future. Basically, today's video is just to show some things to avoid when using these high frequency trading platforms. Now, what do we have to avoid to make sure that your account continues to grow without getting wiped out or something happens with it? Because the market is very volatile. Anyway, I'm going to begin with what it's called free margin and margin level. It doesn't matter how much money you have in your balance. If you have these two out of sequence or out of balance, you're going to probably find this line down the bottom here will flash in red. That means it's giving you a warning that your account is going to be wiped out. This particular account, I have designed it and put it together just to show you what to avoid. Okay, first thing to avoid is having too many open trades, specifically to show you what sort of problem it can cause. If you have too many open trades, especially when they're out of the money, that's going to be difficult to try and recover. If you have, say, 2 or 4 trades up, that it's easier to manage, especially if you have a very small balance. It's easier to manage only 2 trades as opposed to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now, we are always tempted to try and beat the market. This is not this sort of game. You cannot beat the market. All we have to do is put up our trade and let the market do the things for us. All we're doing is following what the market is doing. As I said, I put this up specifically to show you too many trades can cause. Now notice in this trading session, there's $126 out of the money. But on our balance, we got 121. So we're down by about $5. What is important, even though you're down here on your trading value, that your free margin and your margin is a specific area to be saved. Okay, now I'm going to explain. This is why I'm making this video. You've got to make sure that your free margin is at least $5 or it's in a dollar value. It's not on the minus. At the moment, mine here it's at its maximum of losing the account. There is a reason why I'm doing this, as I said. As long as you can follow it. If this margin is below, say, $1, for example, you are in deep trouble. Likewise, if this margin level is below 20%, you're looking at your account being in trouble. Only because of too many trades sometimes, and if you have too many trades out of the money. But if we go back in the beginning when I said they only need probably 2 or 4 trades, open trades at a time, and that is so you can manage it as it's going through its daily process. Say for example you only had 4, and you only had this one which is out of the money, very low volume and size, and you had a reversal trade, this one here on sale, and you purchase another trade at buy. The two can sort of work itself until one gets into the profit. You close that one off and you open up exactly another reversal trade to the one that's losing money. That's managing your account. And you only close the one that's on the trade and allow the other one to continue to be out of the money as long as you're making money on the opposite side of the trade. And that is one way to gauge it. So instead of closing it at early stage and you're losing profit, allow it sometimes to continue based on the historical data that you can probably read. Use these datas, give you a bit of history to see where this particular asset is going into the future. Remember, anything on the left side of your trades or of the asset, this is where we are at this point, anything on the left is history. And basically, history tells a lot of stories. It leaves a lot of clue for you to trade open successfully and have open trades, just looking at the history of where the asset has been and where it could possibly be going. For example, let me give you this. This is today's, of course. The end today's date is the 21st of April 2017. Let me draw you some line just to allow you to appreciate what history can probably provide. Now, it is not perfect, but at least it will give you some sort of direction where the asset is going and where you can place your bets accordingly, or your open trade. Now, I'm just putting these lines in these peaks. Now let me explain. In these resistance, the resistance are the top peaks where the asset's been before. These are resistance, and down below is called support. All I'm doing is putting a couple of lines that we gathered from this mighty tool to gauge where this particular asset is going. And notice, this is where it is now. Notice before in the past, this particular asset has been there, been into that distance, been there before, and it continued until you hit these sort of level, the resistance level. It tends to follow itself. That's what I'm saying. And if you follow it, you'd be surprised how easy it is sometimes just to follow a trend line, follow the history of the asset to make money. Okay? I hope you understand. Now let's go back to where we were. And you take all that information, you place your trade accordingly here, and if you find that this is out of the money, you go back to your losing money. There should be a reversal here later. It might not be today, it might not be tomorrow or next week, but maybe later. And continue that trade, continue that trade out of the money until you get a reversal later on, and this out of the money open trade will start to come back into the money. That's called managing your account. Now, it is a bit risky doing that, but that's some of the beauty of the market, that you can actually monitor, manage your account successfully as long as you follow some of these principles I'm showing you. Free margin must be at least $2, for example, and higher. Nothing less. Anything less, you're liable to lose your account, meaning all these will get wiped out because of the market movement. And of course, the free margin or the margin level must be above 20%. Do not go below those numbers as I have said to you. If you go below, say, $2 or go below 20%, you're in trouble or losing your account because you probably have too many trades that's out of the money or too many trades on your trading, on your open trades. So basically, those are some of the areas to watch for. And all these systems, whether you're trading with a different company or not, they're all literally exactly the same. But what is important to trade successfully, keep this free margin level up, free margin, up, and margin level percentage quite high. That way you can trade safely within these margins, just keeping an eye on it. It doesn't matter what happens here to a certain degree, as long as you're keeping an eye on these free little, or these two secret little buttons to make sure your account keeps growing. This account started with 10,000, now it's gone up to 28. Just taking small trades, as you see the size of the trade. Say, for example, it's only $1, but it's not actually $1. It's just one position. But I wanted to explain it in a simpler form because it is a little bit more complicated. But if you just use this term, you're trading $1 and you're making whatever money that shows here. But because I've been harvesting, most of these trades are out of the money. Harvesting meaning I've been taking the profit and into the balance. Now, looking at the trading history, these are the profits that I've been closing the trades and taking the profit since. So it's just taking small profits every time. Now and again, you might have to do a drastic move and cut some of these losing trades. Take your losses. You're going to lose that much, but at least it will give you a new position to begin with. That is to your own discretion. Remember, based on historical data, to give you a confirmation or affirmation anyway, where this asset could be going. And it's no good, say for example, you close this trade off too early, and as soon as you close, it reverses. If you leave it a little bit longer, it actually becomes part of a signal and part of a great money making opportunity for you. Because say for example you had this in your portfolio and it just keeps on going up. Oh, let me bring it up first. Keeps going up out of the money. Sooner or later it's got to come down. Now you already know, because this tells you perfectly you're out of the money. Even the charts tells you. Then you trade against it. You open up some buy position. You will make money out of the buy position, even though this one's out of the money. So when this one starts to come in your favor, you can sort of open up trades as it's going down. Then so you make money in both directions. You just got to be a bit more aware in how to trade accordingly. So never panic when certain open trades gets out of the money. It could be a blessing in disguise. You just got to learn how to trade it, how to continue the trade without interrupting too much of your account, but making sure the free margin, the margin level is up, and you can continue trading successfully, even though you're out of the money. This is this is just the other side of the engine, what is telling you what your trade is doing. At the end of the day, what you need to do is just to build your balance up, taking small profits, like this one here. I mean, I can take this small profit, call it a day, and open up a new trade. You're just taking small skins out of the milk, for example, or out of the cream. And if you continue just taking it small cuts, often you will build your account up with just small amount of profit, as opposed to trying to get big hits all the time. So this is part of this video today, and I wanted to share with you. Keep your free margin up, margin level above 20%. Never let your free margin go, say, below $3, for example. But if if the free margin is out of the money, then you could be in trouble. Here's another one that I needed to show you. It's out of the money. Here's one. I got all these accounts all over the place. Balance 76,000. This is the one, the FTSE. It's nearly taking me out of the back door. But I notice it's sort of bottom out at the moment. Let me have a look. Of course, there's a little bit of gambling here. I notice it has dropped. That's why I've lost that 36,000. But at the same token, there's a big trend in my monthly time frame. And if all things, here we go. If it all things, everything comes down, then it must come up. So by just being patient, having a lot of balls to hold on to it, it will recover. And when this starts to recover, that means coming back up. I'll be trading, I'll be buying a lot of buy trades just to capture it when it comes up, and this open trade will start to diminish its negative balance and provide the money. Now, that takes a little bit of experience, of course, to drive that. But more importantly, don't let it go under. See the free margin? It's out of the money. I'm already still in the game because I got a bigger balance, and my trading event is less than my actual balance. That's the other thing to watch for. If you got a big balance here, it doesn't matter how much you're losing here. Say, for example, you had $1 million in your balance, and you got 100,000 out of the money. It doesn't matter. That 100,000 doesn't matter as long as some of your trade will start to recover, or some of your new trades that you will open will start making you money and override any of these trades that's out of the money. In the hope that you do your study, don't close trades too early. Sometimes you can close a trade too early out of the money, and next minute it comes in your favor. Anyway, Stephen I Fought from I Fought Fortune, creating fortunes for the future. If you need some information about how to trade successfully on this high frequency trading platform, Forex is the other word. It is a US $7 trillion traded every single day. Get hold of me. Get in contact with me. There should be a contact detail below this video. Click on some of the link to join some of these companies so I can start teaching it to you. Don't put any money into it until you have gone through some of the practices. And of course, subscribe to my videos so you can get lots more of these handy hints for trading for millions of dollars in the future. Anyway, God bless you. Stay away from scams. We love you, and we'll catch you in my next video. Bye for now.